Hey traders, thanks for tuning in, spending some time with me. Today we are going to be exploring various methods for creating trailing stops in Pine Script. So for today's example, we're not going to actually work with a strategy script per se. This is a strategy script, but it doesn't actually have entry criteria or exit criteria other than the trailing stop, and we need to click on a candle in order to enter the trade. So today's lesson is purely about trailing stops. Now I did this for a reason. It's because the code for this script is not exactly short. And so it's going to take some time to break down the various methods we can use for trailing our stop loss in Pine Script. So without any further ado, let's get started. Now what you see on my chart right now is a ATR based trailing stop that is trailing our stop loss 1 ATR below swing lows. And so long as price continues moving in our favor, the stop loss will only ever move up to lock in profits until it gets hit by price action and exits our trade for hopefully a profit. Now, that's not the only method we could use. We could use percentage-based trailing stops. We can use trailing stops based on candle closes or candle opens. And in today's lesson, I'm going to show you all those different methods. So to begin with, here is my script template. We've got a bunch of user inputs here. I'll show them in the settings menu. That might be easier. We just have a few drop-down boxes and some parameter inputs. So we have the direction we want to trade, long or short. We have the trailing price source. So this is swing lows, swing highs, the closing price or the open price. We have our trailing stop method. So that's going to be either an ATR based stop or a percentage based stop. There are many other different variations of trailing stops, but these are the two most common, and perhaps we'll cover future ones in future videos, like the parabolic SAR. And there's so many different trailing methods, standard deviations. It's crazy how many different methods there are. So for today, we'll stick with the basics, and in future videos, maybe we'll elaborate on the different methods because the principles are all the same. This script can be adapted to work with pretty much any trailing stop method. Next up, we have our trailing percent. So this is the percentage value to trail above or below the price action after we enter a trade. Then we have our look back period for swing highs and swing lows. Then we have our ATR period for calculating the ATR. And then we have an ATR multiplier. So by default, this is set to 1, but if I set this to 3, then we would be trailing 3 ATRs above or below price action. And then the final input here isn't one we should really be touching. You can if you want to, but this is just here because if you set confirm to true with a parameter, a user input parameter, then when you add the script to your chart for a time input in particular, TradingView makes you select a bar time. So I'll show you what I mean. If I click add to chart, you can see this vertical line here. This is allowing me to set the bar we want to enter our trade on. So that's just a matter of convenience here. Just for demonstration purposes, it makes it really easy and quick for us to select the bar to start trailing our stop loss from. If you were to add the code we're going to build in the script to your scripts, you would ignore this input and simply use whatever strategy entry criteria your strategy uses. So anyway, that's our user inputs. You'll notice they all have confirm set to true, so that when we add the script to our chart for the first time, the user has to select each value for each parameter. So I'll show you again. If I click add to chart and I click on something, this pops up and I can simply click apply, and that will apply with all the default values. Or I can select short, I can change my trailing source price, my method, my percentage, etc. Finally, the last thing to mention with the user inputs that is a little bit out of the ordinary that you might not have seen before if you're new to the channel or new to Pine Script is this here. These options parameters allow us to specify a list of options. So again, if I add this to my chart and come up to the settings, you can see these drop-down boxes with the options. In order to use these, you need to specify a list of options. We use the square brackets to identify the list or encapsulate the list. We use commas in between each list item. Each list item must be in quotations, and your default value must be one of the options. You can't have a default value that is not selectable from your options. So with all that out of the way, let's get into the trailing stop code. So the first thing we need to do is enter a trade so that I can demonstrate how to use this method with strategy scripts, because that's probably the most common use case for this. You can make indicators that can help you manage open positions, but most of you will want to backtest trailing stop methods in your strategy script. So that's what we're doing today. So to do that, we just enter a trade if the bar time is greater than or equal to the bar time we select when we add the script to our chart. And our position size must be 0, so we must be flat, no open trades, and we must have not closed any trades. Otherwise, when our trailing stop gets hit, the script will immediately open a new trade and we'll just have lines all over our chart, which makes it harder to demonstrate my point today. So no trades can be open and the bar must be the bar we clicked on. And then if that condition is met, we enter a trade with a trade ID of trade, a direction. Now our direction is set to, is trade type equal to long? If so, we set our direction to strategy.long. Otherwise, if it's not long, it can only be short, so we set it to short. And trade type is this user input here, trade direction. All right, so now we've entered our trade. Let's start calculating our trailing stop. So I'm going to copy and paste code over to save time and explain it as I go. First block of code here is just declaring our trailing price variables, which stores our trailing stop value. So this first value here is a VAR keyword float type, and it's going to be the price value that our actual trailing stop is. Now it's set to VAR because we want it to be persistent across all the bars on our chart. We don't want this to reset on every bar that prints onto our chart. We want to save this value because that's the point of having a trailing stop. This next value, however, is the next trailing price that we calculate, and we want to check if this next trail price is higher than this trail price in the case of a long trade, because we only want to trail our stop loss up. We don't want it going down because that defeats the purpose of a trailing stop and it will never be hit. So in the case of a long trade, we want to evaluate our next potential trailing stop. So that might be 1 ATR below a swing low. And if that value is higher than our saved value, then we want to update our saved value. And so this variable we want to reset on every new bar because it's a new calculation on each bar. This one we don't. So that's why it's a VAR variable. So next up, let's get the required trailing stop variables. So the first thing we get is our ATR value, and that's just getting the inbuilt ATR value from the technical analysis library, ta.atr. We pass in our ATR period setting, and we multiply it by our ATR multiplier setting. And this is the value we will subtract or add to our trailing price source. The next two variables we get here are just our swing lows and swing highs. So to keep things simple, we're just using the ta.lowest low over our look back period. So that is 7 bars by default. So we will be looking back 7 bars to find the lowest low and 7 bars to find the highest high. And then we can use these values to calculate our trailing stop if we are using swing low and swing highs as our price source. All right, so now is where things get a little bit complicated. So if you haven't been following this up until now and you're new to Pine Script and this was already complicated for you, I highly encourage you to check out my free Pine Script basics course at pinescriptmastery.com. That will help you, help show you the ropes, because this is all pretty basic stuff when it comes to Pine Script. If you're brand new, this is probably going to make your head explode, but I promise you, if you go through the basics course, by the end of that course, you'll have a much better understanding of what's happening here. But anyway, for those of you who have been following along so far, here we go. This block of code here is getting our trailing stop price. Now, I might have been able to make this code more readable if I'd used if statements, but I thought this was a good opportunity to show you guys how to use switch statements or switch operators. And so don't worry if this looks like gibberish to you and you haven't used a switch before, I'll break it all down. It's actually quite simple. So the first thing we're doing is we're checking if our trailing method is equal to ATR. So that is this setting here. So if this is selected as ATR, then this code gets run or executed. And what we're doing is we're setting our next trail price. This is the one we want to evaluate against our existing trailing price. This is being set to a switch operation. And how this works is we start with the switch keyword and then we pass in a value we want to switch through. And so this is like a bunch of nested if statements. So an easier way to explain this might be to open this up. So in this case, we're using trail source. So that's this user input here. And if I click on this drop-down box, what our switch statement is doing, or switch operation is doing, is it's switching through each of these. So it's called a switch because it's literally like switching from 1 to 2 to 3. And we're evaluating trail source, whatever this value is, against these values here. And so if trail source is equal to close, then this line of code is run. If it's not equal to close, then it moves down to the next switch, which is open. So if trail source is equal to open, then this code is run. And then finally, the default switch is this here, where you can see we don't have any text preceding this equals right arrow sign, which means if this value, the value of trail source, is not equal to close or open, then this line gets executed. And the reason this works is because we only have three options. We have lows, highs, close, and open. And so if our trail source value is not close and it's not open, it can only be lows and highs. That's the last option remaining. And so this line of code here calculates our next trailing price based on swing lows and swing highs. Now remember, this first switch operation is occurring under this if statement. So this is all calculating ATR trailing stop values. And so the first one is a closing price. So what we do here, if we have selected close as our trailing source price, then we check, is our strategy.position size greater than 0? That means we are long. If we have a positive position size, we are in a long trade. And so we want to subtract our ATR value from the closing price. Otherwise, if our position size is not greater than 0, then if we're using a trailing stop, that means that our position size must be negative. It could also be 0, but to keep things simple, it doesn't really matter because our trailing price only comes into effect if our position size is not equal to 0. We'll get to that later. So if our position size is greater than 0, we subtract our ATR value from the close. Otherwise, we're in a short trade, which means we want to trail our stop loss down, which means we need to add the trailing stop to our bar close. And then we do exactly the same thing for our opening price, exactly the same code, except we're adding the ATR value to the open instead of the close. And remember, our ATR value is already calculated and taking into account our ATR period and our ATR multiplier. So this line of code really simplifies things, makes our code more readable. So that's the close and the open. The final default switch output here is the same check. Are we in a long trade? If so, we want to subtract the ATR value from our swing low value, which is the lowest low over our look back period. Otherwise, if we're not in a long trade, then we're in a short trade and we want to add the ATR value to our swing high. So that's it for our ATR trailing stop price. Later on, we need to compare our next trail price to our existing trail price and then set trail price to this if it is moving up or down in the case of a short trade. So that's our ATR values out of the way. The next if statement here, we have an else if. So if our trail method is not ATR, then else gets executed. And what we say here is if trail method is not ATR, if trail method is percent. So if we haven't selected ATR, have we selected percent? Now I could get rid of this entirely. It's a kind of a redundant check because we only have two options here. It can only be ATR or percent, but I'm going to leave this in here because it makes it easier to just copy and paste this block of code if you want to add other trail methods to this list. So I'll leave this in for now. And so this next if statement here, what I've highlighted, is exactly the same as this, except that instead of using the ATR value, we're using a percentage value. And so this is a little bit different. For our percentage trailing stop, I'm checking again, are we in a long trade? Is our position size positive, greater than 0? If so, then we do some quick math. We check, this is what the math will look like. If I open up the settings menu here, by default, we have a trail percent of 10. So this is 10%. So to make this more intuitive, I made this a whole number. This is calculating our trailing percentage multiplier for long trades. And the math looks like this. I need to open a parentheses, 100 minus 10 is our default value, divided by 100 gives us 0.9. And so in the case of trailing a long trade from the closing price, we would set next trail price to the closing price multiplied by 0.9. That would give us a 10% trailing stop from the close. Now, if we're in a short trade, this is exactly the same formula, except we're adding 100 to our trail percent instead of subtracting. And that would give us 110 divided by 100 equals 1.1. And the closing price multiplied by 1.1 would add 10% to the closing price. Now, I'm on a Forex market, so 10% move in the Forex markets means Armageddon has happened. You will never see a 10% move in the major currencies at least, in any reasonable period of time. So this is more for stocks or crypto. It's pretty unlikely that you would ever use a percentage trailing stop for Forex, which is why I included two options here, because I know there's all kinds of traders that watch my channel, and I wanted to show you guys both methods. And so hopefully I've achieved that here. We haven't finished the script, but we're very close. So this block of code is doing exactly the same thing as this, except instead of subtracting the ATR, we're multiplying price values by our percentage multiplier. And the final default parameter here is doing the same thing. If we're in a long trade, we multiply the swing low by our percentage multiplier. Otherwise, we multiply the swing high. And that's it. We now have our trailing stop price. The theoretical temporary trailing stop price has now been calculated. All that's left to do is check if either trailing price has not been set. So if it's still NA, then we want to immediately set it to this value or this value, whichever setting we've selected. Otherwise, if we already have a trailing price saved, then we need to check if this new trailing price is greater than in the case of a long trade or less than in the case of a short trade in order to override our saved trailing stop. So I'll paste some more code in here. And this is it. This is the final block of code, the final complex block of code that we need to evaluate. So let's break it down. It's actually quite simple. First, we check if our position size is not equal to 0. That means we are in a long trade or a short trade. If it's 0, we're flat. If it's 1 or higher, then we're in a long trade. If it's -1 or lower, we're in a short trade. And if the bar state is confirmed. Now, you don't need this check necessarily, but I would obviously recommend it in the case of a trailing stop, because until a candle closes or a bar closes, we don't know the values yet. We don't know. This bar still has 16 minutes to go. There's a very good chance that a new high or a new low will be created before this bar closes. And so if we are updating our trailing stop without taking into account whether or not the bar has finished, is confirmed, then we're going to be updating our trailing stop based on a real-time bar that's not ideal. You really want it to be based on the previous bar that's confirmed. And this check pretty much does that. Bar state.isConfirmed is only true on the last closing update of the current bar. So what that means is if we're on a real-time bar like we are now, bar state.isConfirmed will be false on this bar, but true on this bar preceding it. However, when this gets to its final tick, its final update on the very last nanosecond of this bar's time, bar state.isConfirmed will be set to true. And so the moment this bar closes, this code gets executed and we update our trailing stop. You could probably set this to isNew as well. That would probably achieve the same thing. The problem is with isNew is that if there's a gap in price action, that will be factored into this code as well. So I'd recommend just leaving it as isConfirmed. You could also do isConfirmed history, isLastConfirmed history. That will be true on the last bar that closed. That's almost the same thing, almost, except that it doesn't take into account this bar's high and low on that final tick. So anyway, that's a long way of saying I recommend using bar state.isConfirmed when dealing with things like updating a trailing stop or anything that requires a bar to be finished. You don't want to be calculating certain things on real-time bars. This is how you stop that. Now let's finish up this lesson. Let's wrap it up by breaking down how we update our trail stop. These two lines of code are identical, or these two blocks of code are identical, except one's for long, one's for short. And so here we check, is our next trail price greater than our saved trailing price, or is our saved trailing price NA, so it hasn't been set yet, and is our position size greater than 0, meaning we're in a long trade? If all these conditions are met, that means we're moving our stop loss up, and so we override trail price with our next trail price, the temporary trail price we calculated. And then finally, just a little bonus feature, we add an alert to our script so that we know that if we're managing our positions manually, we need to go and update our trailing stop. And so this alert will inform us that our trailing stop has been updated for the current symbol, and it will also include the price, the trailing price formatted to 5 decimal places. And this will only occur once per bar close. And then here we do the same thing, but we're obviously checking the opposite direction and whether or not we're in a short trade. And that's it. That's, I know it's not super simple. You could obviously significantly simplify this script if you only wanted to use one of these methods. If you only wanted to use a trailing stop method, you don't need these switch statements. If you only wanted to use swing highs and lows, then you don't need to check the closing price and the opening price. So you could significantly simplify this script depending on your trading preferences. But if you're making a script and you want to test various different options, then this is a really good template to work with. You can copy most of this code into any strategy script, and it should work with almost any script. A few settings here you won't need. You won't need bar time, and that's about the only one you won't need. All of these you will probably need. But if you're going to copy this into an existing strategy script, you would copy all of these inputs to the top of your script, and then all of this code below where we enter, all of this code up until where we exit, you would copy into your strategy script. And then finally, you would make sure that your stop parameter in your strategy.exit function is set to trail price. So this will update our trailing stop price in the backtester engine. And make sure you also specify your from entry to be the same ID as your entry ID. If you have multiple entry IDs, you'll need to copy this line of code multiple times and update those IDs accordingly, and probably these ones as well. Anyway, last thing to do, let's draw our trailing stop onto the chart. Let's save our code, make sure I haven't made any mistakes and misled you guys. Everything appears to be fine. Let's remove the script from the chart and then add it back on. And we can select any bar. Let's select this one here and change it to short. Change the trailing source to closing prices. I'll leave it as ATR for the moment. Let's change our ATR period to 7 and I'll look back to 5 bars and our ATR multiplier to 2. Click apply, and there we go. I have made a mistake. Our trade is not exiting. I know why. It's because I did a typo here. I left that one in there, and TradingView does not know which trade to exit. So let me get rid of that one. That was a very underwhelming finale. Save my code, and the parameters should remain. There we go. So the parameters stayed the same. Now you can see the stop loss is pretty tight to price action. Remember, we set the trailing stop to closing price. So even though it looks like it would have been hit here, it actually wasn't updated until this closing price here. So it was this bar here that our stop came down. And then when this bar closed, our stop came down to 2 ATRs above the close. If I set this back to lows and highs, then we have a more traditional trailing stop above swing highs. Let's jump over to Apple. Why not? Go to the daily chart. It's a little annoying. We need to remove our script and add it back on in order to get this to pop up again. I wish TradingView would add an option to just really quickly select this, but anyway, let's do a long trade from down here. So long, we'll set the trail price to opened, and we'll set the trail method to %. And I don't know what the ATR is on Apple. Let's set the trailing price to 5%. I need to re-add it. So open, long, %, 5%. These parameters are ignored when we're using a trailing stop of a percentage type. So we can ignore these settings. Click apply, and there we go. That was a little bit tight because we're operating from opens. So when this red bar here closed and was confirmed, a new trailing stop was calculated from its open of 5%, and that got hit here. Hey, it's Matt from the future, editing Matt. I forgot to mention, for you traders who like to exit when a market closes below your trailing stop, this is particularly popular in stock trading strategies. It's really simple to implement that adjustment to the script. However, you need to use a different strategy exit function. So let me show you what I mean. So down the bottom here, we have our strategy.exit that passes in our trailing stop as a stop limit order. If we comment this out, if we wanted to exit if the market closes below our trail price, we can just simply say if close less than trail price, then use the strategy.close function. And this function also requires an ID to exit. So our trade ID is just trade. So now if I save my script, minimize this, you can see that our stop loss was hit here, but it didn't exit the trade because we didn't close below the stop loss. We closed up here. However, if I reduce my trail percent to 1%, now the script exits as soon as this bar closes below our stop loss. On the next bar's open, we exit our trade. Now, obviously, this is only going to work for long trades. So if you wanted to make this work for both, we would just simply say, it's probably better to put it here. We can say if strategy.position size greater than 0 and the close is below our trailing price, we want to exit. Or you can copy this, flip our operator for short trades, and flip our operator for our trailing stop. save my code. And this will also work for short trades now as well. So if I remove the script, add it to my chart, and let's say we entered short here, short percent, let's go 3%, apply, there we go. Now you can see we're exiting when we get a bar close above our trailing stop. Anyway, thought I'd better mention that to make this video comprehensive. Let's go back to the past recording, Matt. So that's it for today's lesson. I hope you found this interesting. As always, the source code will be below, so you can go and play around with this and modify it to your heart's content. I hope you found the lesson interesting. If you did, make sure to hit the subscribe button and the like button and comment and all the YouTube crap. Only if you want to. I do appreciate it, and I do read all the comments, but I know how annoying it is when YouTubers start talking like this. Finally, if you do like my content and you want to learn more about my thought process, the various influences and inspirations I've had in my trading journey over the past 5+ years, go and check out my weekly newsletter. It's completely free. There's no strings attached. I don't try to sell you anything. Sometimes there's affiliate links to Amazon books and stuff like that, but it's completely free. It's just a way for me to share my thoughts with you guys. And I enjoy writing, so I like to spend an hour a week just writing out an email explaining a book or a podcast or something I watched, something I got value out of, a trading technique, pretty much anything that I found valuable. I share that with you each week. So if you're interested in that, go to theartoftrading.com. If you want to learn more about Pine Script, there's pinescriptmastery.com. I've got a bunch of courses on there. And with all that said, I hope you have a fantastic weekend if you're watching this as I release it. If not, have a fantastic day whenever you are and wherever you are in the future. I love you guys. Best of luck with your trading, and I'll speak with you soon. Goodbye.